I hope to be as effective as Marcello was in coordinating the discussion, and you know that you may have realized that my task will be much more difficult because in my panel there was a much wider range of opinions. What I will do is to follow Marcello's style and ask first the external discussants, starting from Marcello actually, to give their view on the presentation of Heiner, Ansgar, and Brigitte. I just want to make a point, a very simple point, which has not been made so far. What we know about the currency union, so in general, and monetary agreement, is that they are mostly they are political in nature. So the political issues underlying the Eurozone in particular, so our currency union have been mentioned, but have not really been explored. So one of those issues is we know that we are living in a system where, owing to the current rules, wage deflation is actually the only safety valve which can work quickly enough to prevent a major break. So now the question is, how is it sustainable in the long run? Because there is a very trivial point. So we still think of GDP as being from the demand side as a sum of consumption, investment, but we all know that GDP has three definitions. The first one is from the demand side as the sum of consumption, investment, export less import. The second one is from the production side as the sum of sectoral value added. And the third one is from the income side as the sum of wage and profits, which means that when you cut wages, by definition, you are cutting GDP. So this is standard national accounting. And what's happening now in the Eurozone is that we have a demand crisis, basically because if once a shock hits our country, we are forced to repress wages. By definition, this causes an external demand crisis to foster an internal demand crisis. And this is the contradiction we are living in. And it is mostly a political contradiction for the very reason that it's due to rules, and those rules are not a fact of nature, are not like a gravity law, are rules that were chosen by men. And there is a huge literature in political science about the reasons that advised government, both in the core and in the peripheral members, to choose those rules instead of others. So after these words, unnecessary words that were just spoken in order to let the noise fall, I will give the floor to Marcello for his remarks on the previous panel. Marcello, the floor is yours.
Thank you. Let me first say that it was a great panel. I enjoy and I like all the considerations and the support that has been given to what I've heard. I think that in order to understand where we are and where we want to go, I could start to move the other way around. I put myself in United States of America. I become a person that advise the Treasury Minister. And I say to the Treasury Minister the following. Look, you finance with the treasuries your deficit, your spending, your investments. But since we have to build this bridge in California and we have to build this airport in Texas, and these two countries, even if they belong to the United States of America, they have a different risk perception by investors. It's better to issue two different kinds of treasuries. one to build the bridge in California and the other to build the airport in Texas. Well, in my previous intervention, I mentioned Hicks and the ESLM model. I would think that the Treasury Minister would tell me, Marcello, but why we need to disaggregate the Treasury yield curve? We have one currency, we have one yield curve. One thing is if Texas or California or whatever wants to do something in their region, in their state actually, by using their denomination, one thing is to move our interest rate term structure, and let me be a little bit more financial, and term structure volatility of interest rate into another world by creating two CDS sovereign, by creating two basis arbitrage within finance, by creating the gross premium of liquidity difference between one issue and the other. I mean, the second question that he would tell me, he would ask me, would be, Marcello, do you want to disaggregate the country? Do you want to create a United States of America of A series and of B series, or C series, or whatever? Why I'm saying this? Because if we move, if we agree, but this is the starting point, that the Eurozone, with all the limits, I mean, I wrote a book, plenty of 600 pages of limits, okay? If we believe that in a general world competition framework, where we have China on one side, we have United States on the other, and then we have the Eurozone as a whole, well, the first thing to do is to recognize all the bad things, to move into the logic of a united, a union, and then move forward in that direction. This requires a lot of compromises. We are experts of this. For more than 100 years, we had a non-optimal currency area, the lira. With the north and the south, I've seen the slide. The northern part of Italy is part of the core countries. Okay, thank you very much. The problem is that I come from the south, actually. I was born in Bari, so I like the north because I have studied in Milan, but I mean, it's only part of the story that we have to manage. And so it's critical that we remember what we have done for a plenty of years by learning from our mistakes. Because, you know, the first part of our reign, of the Italian reign, we don't make transfer. We make the lira working exactly like the euro. And the north of Italy takes advantage from the south. A lot of part of the economies of the south were disaggregated. For some technical reasons that are, I have not the time now to summarize, but I ask you to take my word. But I can tell you something. With the presence of finance, all these dynamics that makes the euro like a magnet that takes money from the peripheral countries are amplified. Think about the subprime crisis. It was a real estate bubble. We have had a plenty of real estate bubble. I mean, anytime there is a recession, there is a real estate bubble that explodes. But why this one has been incredibly huge? And because, unfortunately, through structured finance, the risks were re-engineered in a wrong way, unfortunately. And obviously, what it was a bubble with, you know, usually a small balloon with a thick, you know, it becomes something like a tire. And a tire can inflate much more oxygen before exploding. And obviously, the interconnection between the banking system, the undertaking of risks by the banking system and the spreading of this, has determined that this bubble has been definitely more, as an impact, definitely higher than previous bubble. Because it's a question of leverage. The usage of derivatives in that case that would re-engineer that kind of risk. So the point is that we live in this world. We don't live in a world of 50 years ago. We live in a world in which some bad dynamics, unfortunately, in their effects, are definitely amplified. So what I'm saying is that if we start from the idea that the Eurozone can create a competitive arena, and I like to say, I will make the list of the problem. I will say that, for example, we need fiscal transfers within the Eurozone. We need to recognize that inflation gap, as I have seen in the presentation of Heiner, is a problem. And it's not the case that Italy should move down towards the Germany level. And the other consideration that we have seen previously. But it is clear that we have to examine what is happening. Let me just share with you an example. When the European Central Bank makes its first intervention with the long-term refinancing operation between 2011 and 2012, this money never arrives at the real economy. This money serves to two main issues. First, the deleveraging of the peripheral risk by the core countries, and secondarily because the peripheral banks need money to pay their debt. And this debt comes from a vendor financing strategy that comes from the mercantilism activity of German economy. So what I want to say is that in the first round of this Eurozone architecture, the internal demand of the peripheral country support the German trade surplus by getting more and more debt. Once this debt was huge, the European Central Bank fixed this issue by starting the risk nationalization through public debt and private debt. Since at a certain point in time the internal demand of the peripheral countries obviously collapsed, because you finish money, you finish savings, you are in debt, you cannot change washing machine every year. At a certain point in time, obviously Germany have to move outside the Eurozone borders. And in order to do this, they need a euro exchange rate depreciated. And then we need another policy, another intervention from the European Central Bank that was the quantitative easing, that in fact was not engineered in a risk-shared way by getting the European Central Bank buying the govies, but by creating, I wrote an article on Risk Magazine several years ago when the European Central Bank decides the structure of the quantitative easing, by creating a synthetic CDS, because the national central banks receive loans from the European Central Bank to buy the Italian treasury. So what I want to say, if we put all this contradiction and the finance amplification that I have described before in this contradiction of the euro architecture, maybe that still we can be sure that we have discussed a new Eurozone architecture. Obviously, if with these arguments that obviously in this moment I have given in a stylized way, just with some sentences and asking you the patience to believe my word, obviously, if in a debate all these arguments finishes that there is solidarity with the peripheral countries if we make the Eurobond, that the target to net balance does not represent risk nationalization or capital that goes outside the peripheral countries, it is clear that in this case the plan B must arrive. And in the case of plan B, we are everybody sure that exchange rate and interest rate cannot be the same at all.
Thanks, Marcello. Now I would like to give the... It's now Jens who is going to speak. Jens belongs to the financial community, to this world where worldly wisdom says that it's better to fail conventionally than succeed unconventionally. So he did, and he also wrote a very nice book on the Eurozone. a book which is permeated by a deep feeling of European solidarity, of European, of love for Europe, and also of the worry of the political risk to which single currency exposes our culture and our institutions and our freedom and our peace. So I would ask Jens to comment on our panel. Jens, the floor is yours.
Thank you, Alberto. Yes, so I'm glad you're framing it that way, because we talked a lot about debt spreads and we talked a lot about debt ratios, but in the end it comes down to politics. And I think just want to start with sort of explaining why I'm actually here. So Alberto gave a few hints as to it, but I flew in from New York last night, and the reason why we have to come to Italy all the time is that in a way Italy is the most important country in Europe now. And what I mean by that is that my job on a day-to-day basis is to advise investors. And do investors spend a lot of time thinking about the Netherlands or Belgium? Absolutely not. But they spend a lot of time thinking about Italy, not just because they might want to invest in Italy or reduce their investment in Italy, but also because it matters for everything in Europe what's going on in Italy. So I think it's fair to say that investors around the world, when they think about Europe and think about what's going on in Europe, the key country of focus right now is definitely Italy. So I'm very happy to be here this week, and we're going to have to come back because we need to understand what's going on in Italy. It's super important. The other reason that I'm here has to do with this book that Alberto mentioned, and it ties in with the whole debate that we're having in this room, and it's amazing that we're having it today in this setting. So what's special about Italy is that Italy is a large country, and given the structure of debt, even though the debt is large, it's structured in a way where exit is possible. And it comes from two simple things. It comes from the fact that the government debt is issued under Italian law, so you have control of it. And then the private sector debt, there's not that much of it because there's a lot of savings in Italy. So it's different from Spain or Portugal, where they have a very large stock of private sector debt, and therefore any devaluation would be potentially very problematic because it would be hard to pay back that debt, and it would create all kinds of tension. So Italy is special. Italy has the choice as to whether to stay with the euro or go down another route. So that's why we're having this debate, and it's really a debate that's come quite far, and I think it's a debate that has come further in Italy than in any other country. If we go back to Greece in 2015, we had a government, the Syriza government, that came into power with a sort of very anti-European stance. But there had been no debate in Greece at that time as to what to do with the currency, and therefore, when it came to making the final decision, actually there was no choice because there was no plan B at all. So they had to stick with the demands. So that's what's starting to be different in Italy compared to any other country, that there's some planning being done, and this is why we're here this week. I think overall, when I look at the risk that we're seeing, there's a couple different components to it. So obviously, a lot of the previous speakers here have talked about the sort of cost and benefits. And we've highlighted the cost in terms of perhaps low growth, lack of fiscal flexibility. And obviously, as that cost-benefit analysis is perceived to deteriorate, that will lead to a rising risk of Italy exiting the euro. That's your point as well. So that's the one factor. The other factor is the one I just mentioned. How prepared are you? If you're prepared to make that decision, it's easier to take it. If you're not prepared, then you actually can't take it. So the preparedness is an important variable. But the third variable, and this goes back to the sort of political risk in the Eurozone overall, has to do with what is the perception of Europe. if there's a perception that Europe is going in the right direction, then perhaps you can sort of compromise. Okay, we take a little bit of pain in the short term because we are moving in the right direction. So I think this perception that there's a degree of European solidarity is really important. So we've been through a number of years where that perception has deteriorated. There's been a focus on austerity. There's been a focus of, Wolfgang used the word colonization of sort of the Greek situation, right? So that's definitely not a positive narrative. So I think right now we're coming into a point in time where we're at a really crucial juncture for Europe, where there's perhaps a window or opportunity to turn the narrative around and show that the sort of European ideals that actually underpinned the building of the European Union and the predecessors to it, that those ideals are still there. So what are those ideals? So I would use two words. So there's something about democracy that is crucial, and there's something about solidarity that's crucial. So if you can reinvigorate a narrative that is built around those two words, then I do think it's much easier to keep Europe together and have Italy be a part of the European currency from a long-term perspective. But that all comes down to politics, right? So there's a lot of optimism around France now because we have a new president. The new president is pro-European. So when I'm thinking about the outlook and this window of opportunity, it seems to me that the big countries in Europe, Germany, France, and Italy, need to come together and try to build a new narrative that is based on those European ideals. And this will be very important as to how the Italian election is going to play out next year, because it's going to be based on a negative European narrative or a positive European narrative. And I think this really is a crucial time, and I think it's much more about politics than the specifics of the spread between German bonds and Italian bonds.
In his speech, Ansgar mentioned the fact that the euro area is becoming a small open economy, and I was puzzled by this interpretation, which I found interesting. I don't know if he wants to elaborate on the political implication of that when a big area becomes a small open economy in the global world. Of course, you have absolute freedom of speech, so you can say basically, you can choose your theme.
I would like to answer to that.
Okay.
Yeah? If it is okay.
Yes, okay.
I would like to say a word on the two comments that were given. And I must say, I'm not fully understanding it. You see, I put myself into the body of an Italian politician. So what are the options that you have? The one thing is you can go to Germany, as Tsipras did at the beginning, and talk to the Germans, convince them that they're wrong and that they have to change. Well, you saw with Tsipras, the Germans were laughing at him. And so, yeah, I forecast even to Tsipras that they will laugh at him, and in the end they laughed at him. So that is what you can do. If you think that doesn't work, and it is not worth going to Berlin to talk to them that Germany has to change, then you need in politics, you need a threat, you need a weapon. What else? To go to Germany and to say, hey, we're a new Italian government, we're doing everything in a different way. If you change, well, it's useless. No, you need a weapon. And we're talking so much about exit. Let's talk about exit as a threat, as a strategy to change the Germans without exiting at the end. That is, even at this moment, much more important than just to talk all the time about the exit. If France and Italy are willing to consider this as an option, and they go to Berlin and tell Madame Merkel, so if you don't change, we go out, the Germans will change immediately. I can tell you why. It's very simple. German politics are very simple. Because German industry will go to Madame Merkel and tell her, you change, and tomorrow she changes. That's very simple because they do not want to lose their markets. If she listens to no one but the German industry, she listens immediately. We had the case when there was, after the financial crisis, Madame Merkel went to the press and said, never anti-cyclical policies, never ever. The next day she went to the press and said, yes, we're doing a wonderful program to save the German automobile industry. Why did you do that? Well, because in between, the German bosses of automobile industry told her to do so. So that's the only way. That's politics. I mean, let's not talk just about theoretical things. And then, if you're able to change, and if you're able to change the German model, and I realize again, nobody even ever wants to talk about the elephant in the room. No? It's difficult to talk about the elephant in the room. I'm talking about the elephant in the room all the time, just by the way. But if you cannot convince Germany to change, if you have no means to change it, so what then are the alternatives? And Marcello mentioned it. The one thing is you go to tell the Germans, then we need a transfer union. We do what the East Germans have done the same thing. You have run down East Germany to zero, and fine, Italy is dead, but you pay. Okay, if you want that, you can do it. But if you don't want that, what is then the alternative? Then to wait another 10 or 20 years till the Italian industry is fully dead? Because you have no way to survive. Your industry has no way to survive. With a gap in competitiveness of 20% to Germany, there is no way to survive. You die tomorrow, or in 5 years, or in 10 years, or in 20 years. That's what I said. And this is easy to understand. And if you get from the Germans one way or the other, by a threat or by whatever, the agreement that they're going to change, that they're going to fix this thing that I showed, this gap in competitiveness, with their own means, then Mario Draghi has an easy job, and I'm sure that he would do it. Then you don't have to speak about spreads and things anymore. Because then Mario Draghi would go to the press, as he did in 2012, and would tell the people from the capital markets, forget about spreads. There is no spread anymore in this world because we're not allowing it. Full stop. And then it's over. The only why is he not doing that? Why is he not doing that? And I know him quite well, so I think I'm right on that. Why is he not doing that? Because he knows that nobody wants to fix that thing. But if nobody wants to fix the competitiveness gap, then he cannot promise the markets to avoid any kind of spread among the countries. But again, you have to discuss with the Germans, because as long as people believe, as some of my German colleagues said here, that a government needs a market to sanction the government when it behaves wrongly, then forget about the whole discussion. Then it doesn't work at all. I think it's a fully wrong idea, and it's no evidence for that ever in the history the markets were able and in a position to find out whether government debt is sustainable or not. They're not finding out whether a CDS is sustainable, is reasonable or not, and they made the biggest mistakes you can imagine, but they can judge governments, obviously, in the German strange view. No, they cannot. And again, you have to convince the Germans that it doesn't work. And if you cannot convince them, then forget about it.
Thank you, Heiner. And let's add two details, if I may, to your lesson of political realism. The first is that you started with if France and Italy go together to Germany, this will never happen. Because the idea of an alliance of the weak countries against the only strong country of the Eurozone is politically impractical, so unfeasible, for the very reason that French constituency and French government do not believe they are on the wrong side of the Union. And at the same time, we know, since Felsa in 1997, that the French aspiration to equality is not consistent with German desire of hegemony. It's, this is the main fault line. And so that's basically the political economy of our union. At the same time, it's not so likely that Germany will change its view for the very reason that the German constituency has been told for years that the crisis is our fault, it's the fault of the lazy people of the South.
Sure.
So now no matters what political color, every German politicians that would adopt a more cooperative attitude would be immediately attacked by his counterpart. And we had Mr. Schulz, who is colored in red, if I'm not mistaken, who had very, very strong words against Tsipras, who was socialist like him. It was a clear demonstration that national interest comes before, and the desire to be re-elected comes before the desire of find solutions. So this is my point, but since now we are on a round table, even if I'm a chairman, I can give you my point of view. So Belke, the floor is yours.
Okay.
Ansgar.
Maybe first on your concrete question about the small open economy property, what we would like to express there is that the share of German GDP or Euro area GDP of world GDP has gone down. And if we argue that we have demand constraints, demand problems due to demographics or other points I mentioned, then there must be a safety valve elsewhere. So this was one argument. Of course, I disagree with Mr. Flassbeck on the determinants of the export equation. If we estimate export equations and current account balance equations, we first go for asset bubbles. I see the main origin in the asymmetry in the current accounts in the euro area, mainly induced by the bubbles in Spain, in Ireland, and so on. And also I see inflation and not deflation, but this doesn't matter. Then I don't see that relative prices are the main determinants in export equations and so on. And also if you go to investment demand, the interest rate is not the main determinant. If you ask entrepreneurs what determines investment, is not at all the interest rate. And this is also not significant in the investment equations. It's expected growth, it's regulations, taxes, and so on. And what we also address usually at SEPS with this kind of small open economy now is that, for instance, we are very much in favor of the EMF instead of the IMF. And this kind of small open economy property means that you have to have a bundling of the voices, the European voices, within the IMF. And we have all elements there. You have the ESM, the kind of financial stability watchdog, which can be easily used and evolved step by step into such kind of institution. So this is belonging to our concept of economic governance. So this is the answer to the concrete question of what we mean by the small economy property now.
Can I have a free question?
Yes, of course. So Brigitte, I give you voice.
Yes, so if you don't mind, I'm going to free ride on all my colleagues. What I mean here is that everything they have said, basically I agree with them, because there's a common denominator. And if you listen very carefully to all my colleagues, which I'm very honored to share this panel with, is that currency, I mean, I'm a monetary economist, so I think for Heiner, I'm the worst kind. But I'm a kind woman. But currency is based on trust, yes? And currency union is even more based on trust than just a national currency. What does that mean? Essentially what that means is that let's look at 98, when actually some genius thought of the economic and monetary union. Was there trust already or not? At the time, I was already, I'm quite old as I said before, already doing some research, and I'm very lucky, because some of my friends were in the Banque de France. I'm not talking of Banque de Grèce. I'm not talking of Italy. I'm talking of France. Banque de France, beautiful building, aristocratic palace. And I asked for the account on seigneuriage. Simple. My friend asked me, would you like the official account? Or the true account? Yes? That was in 98. Now, why trust is so important? Trust is very important because essentially it's a basis for any institution. It's a basis for behavior. There is a wonderful moral philosopher called Jonathan Haidt. And this moral philosopher asked 40,000 questions. I'm not going to mention those questions here because some of them are pretty rude. Basically, to try to assess how different people have of trust and moral. Yes? And obviously, there are differences. I'm going to give you a more concrete example, which somehow may even explain to you why France has elected Mr. Macron Jupiter and why the UK decided to vote for Brexit. So what is the reason here? Well, again, we are going back to trust. What are the French doing? And for us, it's completely normal. We are extremely good at writing contracts, at developing bureaucracy, but also the way somehow, and I'm very sorry if there are many French people here, but the way somehow we are brought up, we don't respect institutions very well, very much, which means that we sign a contract. Doesn't mean we are going to respect it. In the UK, it's completely different. They are never going to sign something that they are not 100% sure that they are going to respect. And of course, I have much less knowledge of my German colleagues here, but I suspect that probably the behavior is about this very similar to the German. And this understanding about this complete complexity of understanding of how institutions are supposed to work is phenomenal. Now, two more examples. I just want to know do you know which country broke the more times the budget rule? We have many rules in the Eurozone. Budget rule, you remember? Now fiscal compact. Which country has a record? Is that Greece? No? Nobody wants to answer? You know, you will have a penalty if you are my students. I'm very student. France. Yeah? Between 11 and 13 times, and thanks to the legacy of Mr. Hollande, is not the end of the story. Now, there is another rule in the Eurozone. That is the current account surplus. How does people think that currency union works? If a country, as Heiner said, just accumulate but never transfer. This, of course, is Germany. There is a rule that says you can't have for many years a surplus above 6% of GDP. Okay? So those two pillars of the economic and monetary union are not respected. So I really don't see how this wonderful common currency can go much further. Thank you.
Thanks, Brigitte. So you reminded us that currency is based on trust, and this prompted a reflection on the fact that, as Alain Parguez had written before the onset of the euro, actually in the Eurozone, the euro is run as if its value was depended on its scarcity. So it's in this sense, it's an interesting feature because it reminds us of the gold standard, of course. So now we were asked to give an advice about the Italian public debt in the Eurozone. We have 5 minutes each for commenting on the implication of what we have been saying on public debt sustainability. So basically there are two views. The prevailing view is that monetary union is a safeguard and will help the Italian public debt to be sustainable. And there's a minority view which on the contrary, think that actually under the currency union, the Italian debt is much more likely to be unsustainable. One of the reasons is that the monetary union brings about deflation, which is of course a big, major cause of financial fragility. I was asked to speak slowly and I'm complying with this request. But people now are sleeping, so you cannot but have the cake and eat it, so sleep I will also. So we can do another round, starting from perhaps from Marcello, who is an expert of sustainability for his role.
Again, there is a contradiction in terms. Because, you know, the euro starts with this idea. Because with the Germanization of interest rate, obviously our public debt should have become more sustainable. It should give room to do this. Unfortunately, after 2009 is no longer the case. So in my opinion, the gentleman agreement of year 1998 has been broken completely. It's only a fact that we have to understand this, to go back to the documents that in the different groups, I have the opportunity to join one of this group a long time ago. It's important to realize this point. But what is more important to realize about the future is that if we continue with this risk segregating strategy by the euro bureaucracy, obviously we will face the wall that Heiner has described. Look, it's after 2011 that we don't see risk sharing, but actually we see risk segregation within the Eurozone. We sign the European Stability Mechanism Agreement. What about public debt? We provide the public debt with the collective action clauses. The collective action clauses serves to limit the possibility of redenominating the public debt. In this moment, half of our public debt is very difficult to redenominate. So it's like it would be in a foreign country. And the proposal, the recent proposal, is to transform the collective action clauses in the credit participation clauses, in order that if there is still some room of redenominating that part of the bond because it needs that the institutional investor would reach more than 30% of the quota of that issue, with the credit participation clause, the redenomination is excluded a priori. After 1st August 2013, the European Commission issued the communication on the banking system. What was behind this communication? A soft bail-in that actually for our private investors has not been felt very soft. Because with that communication, it has been inserted the burden sharing inside the resolution for the banking system. Third, we signed the banking union. One surveillance, bail-in, and what about the European Fund to Protect Deposit? Then we see the long-term reference cooperation, the quantitative easing. I have already said in my first talk. And then now they want to fix the quantitative easing instead of transforming this intervention in a risk-shared one by bringing back the govies from the national central banks towards the European Central Bank in order to unbundle these CDS synthetic cash flows. What is the proposal? To make the SBIS. Look, with the SBIS, I want to be very clear. The part of the debt that will be securitized within the vehicle maybe will be covered by the euro architecture. What about the rest? What will not enter in that securitization that obviously will follow the proposal, not the capital P, but the GDP key? What is the difference? Come on, what we are talking about? Are you kidding us? If there is a problem, you cannot follow that rule. It's part of the risk segregating style political intervention that we have seen, policy measure intervention. So what is the actual reason why of the SBIS? Is the following. And then I will close this small intervention. Since we are not sure that at the end of the year the fiscal compact will be signed by all the Eurozone member countries, and since it is not very clear if an agreement that is not recipe in the treaty can be enforced, because you know, if you don't receive in the treaty, it will be leave the agreement, but it's not clear if you can enforce. Actually, several experts of law told me that you cannot enforce an agreement that has expired. And this agreement expired year 2017. So what we need a stronger tool to impose fiscal austerity. Because if obvious, if a large part of the Italian public debt will not join this securitization process, how can you manage this large part of your debt? It will become junk bonds. And obviously you will have a problem in refinancing. And so you will have, instead of an austerity with the rule of 1/20 for the public debt, you know, the public debt rule, you will have a sort of fiscal axe on your heads. In a couple of years, you will face the nightmare of the markets for that part of the debt. And so, the result of the fiscal compact outcome that, believe me, please read the articles, is not in line with the treaty. I'm not a lawyer, but that is the final goal. And again, I raise the question. If in the treaty, and I repeat, I ask you to read them, as I have done, there are plenty of sentences that evokes the idea to have an harmonic economic development, that the cycle should be synchronized, that the risk should be shared, and all these things. And also if you read the articles in the fiscal compact, this measure is anti-cyclical. But why it is pro-cyclical? Why nobody takes the courage to bring this article in front of the European Court and say, we believe that this agreement is illegal, or that is some problem, at least to be discussed? And believe me, the year 2017 is the perfect storm year. We have a fiscal policy that has to be discussed, fiscal compact, and a monetary policy that has to be discussed, the quantitative easing. Now you have two roads. The first one, close the QE in the central bank and keep the govies there for a while, and move this quantitative easing into a risk-share decision, change the fiscal compact by keeping out the investment, and then, as Sargent and Wallace taught us, you can have the synergy between fiscal and monetary policy to create growing for our Eurozone area, and maybe start from them. I know that these are only the starting part. I realize that is only the beginning. Or otherwise, we can see the perfect storm that will arrive as an axe on our shoulders.
May I had a very trivial remark of this very interesting technical point. So all over the world, people who lend money to the wrong person incur in losses. So we are destroying our economies for allowing our creditors not to incur in losses. I don't think this is ethical. So it's in the best interest of the financial community to let competition work and let the worst lender fail. Jens, well, so I give you the floor now.
Well, so your question was whether the debt is more sustainable in or outside the euro.
Yeah, in or out.
So
we are running out of time, by the way. It's my fault.
I can be a little bit briefer. So that kind of question assumes you're going to answer yes or no. But the problem is we don't know what the euro is. So the euro is being redefined. Back in 2011, we had a euro that was designed without any backstops at all. So we had Italian debt spreads went crazy, even French spreads started to widen out dramatically in 2011. And everybody could see that that was definitely an incomplete currency union. So there were certain backstops that were introduced. And we've had some degree of stability since then. But as we can see in the book here, like it's still not totally complete. And there's a lot of discussion about how to make it complete. So to answer your question, Alberto, it will be whether the steps are taking to essentially embed some more solidarity in the system. That would determine whether the Italian debt is more or less sustainable inside. So if we can get some solidarity going, like the first topic we haven't even discussed is on refugees. Are we going to have refugee solidarity? That is an important issue of solidarity that goes beyond the economics. So all those things will feed into the equation. Right now, the currency is incomplete. The debt looks very problematic. So we need to have something that changes in order for the Eurozone to help with the debt. At the moment, it's not helping.
Mayor? Yes. Yeah, to answer your question is very simple. Because look at Japan. If you have able politicians, if you have the right institutions in place, it's no problem to run an economy with 120%, 250, 450, no problem at all. No problem at all. It's just an ideological problem. That is what it is. And that is what Marcello said is very interesting, because it shows that as long as we have totally different opinions about what the euro is and what the institutions mean, what kind of policies is needed, then it doesn't work. It cannot work. You cannot run a complex system like the currency union with totally divergent views on how the economy works. And that starts with a very simple point, the most simple point of all, that the biggest country, Germany again, has not yet understood that the euro area is a huge, rather closed economy in contrast to what my colleague from Germany said, not a small economy, it's a huge economy, the second largest in the world. And it's a rather closed economy. And this economy has to be run in a totally different way than Germany, a much smaller economy, which is extremely open now, 50% export share. And if you're not able to communicate even that with the Germans, among the Germans, into the Germans, I don't know, all around Europe, then how can it work? Can you imagine what a Eurogroup meeting of finance ministers is going to be? It's reading papers, I can tell you, I was there. It's reading papers, reading silly papers, without any discussion. They're reading papers that the bureaucrats have written for them, and there's never a serious discussion about this and that. There's never discussion about different theoretical opinions. There's never discussion whether monetarism is dead or not. There's never discussion how we should deal with the spreads or not, what we should do with fiscal policy. There's nothing like that. How can you run such a complex system under these institutional constraints? I don't see it.
Ansgar.
Yeah, I don't think that Japan is the best example we can discuss in that respect. When it's Japan with its zombie banks, zero growth, zero inflation, bad investments due to low interest rates. I've been to Japan 5 times and can compare it with China, so complete difference. But let me now answer to the question on the sustainability of Italian debt. As I tried to express in my first point in my lecture, I would like to argue that the situation now is better than in the EMS 1995. I try to give arguments for that. And especially now the financial markets see euro area exit as the bigger danger as compared to defaulting on debt. This I try to prove by looking at US denominated bonds and the spreads on this. So exit is no panacea. A highly indebted country can choose between pest and cholera in that respect. So staying in or getting out, it makes no difference. So secondly, I haven't talked about monetary policy yet. If I look at QE, and I know that some countries are keen on introducing permanent QE as into the EU governance. We heard it in Brussels, the Greek colleagues and others want to see it as a central element, but then you have to ask whether QE was really efficient, even in the US. We recently published a paper in Journal of International Money and Finance, also commented by John B. Taylor, where we checked for the efficacy, and we saw no structural break in the common downward trend in the worldwide interest rates. So it nearly had no impact. So we should not follow, but we have to follow. And this I meant with the statement that we have become a small open economy. We have to do what the Fed does. Only later on, this is the liquidity spillover stuff. And finally, I don't really believe that austerity is in place here in the euro area. I see it in Brussels. The excessive deficit procedure is a toothless tiger. You see manipulations in the GDP figures, political cycles in the production of GDP figures. So I don't see that it's really efficient. As I said, Europe works with package deals right now. And you mentioned Weidmann. Weidmann argued that the price for giving up Bundesbank-type monetary policy in the euro area, and this has been given up by Germany, is seen in austerity, but I don't see austerity. I don't support Weidmann as well in his view, but I really don't see austerity materializing in the euro area, at least not with respect to the big countries. Among them also Italy is, but nevertheless for the program countries, and that is a pity. Thank you.
Thank you, Ansgar.
I will be very, very short. No more than 2 minutes. Thank you to stay because I wanted to give you the paper. Anyway, never mind. Yeah, never mind. Okay, so for me, that sustainability is a very simple problem. Is whatever you choose, there are winners and losers. And I belong to a school where I prefer that the government I vote for or against decide who are the losers, who are the winners. This is my line. Goodbye. Thank you very much.
Thank you, Brigitte. Well, we were in perhaps Marcello. I saw Marcello was keen to add some remark, just one sentence. You have 60 seconds.
Yes.
A long sentence.
Not also short. We have to decide if we believe to this sentence, only a God can save us.
Jupiter.
Or otherwise, if we would believe that was right a very important president of the Federal Reserve, Ben Bernanke, when in 2012 he said, "I transformed the Federal Reserve in a bad bank, and it is a new course of monetary policy." Let's decide.
That's an interesting perspective. So I had also a very short sentence. In the first panel, it has been mentioned that political union will be the last stage of the European integration process. But we have a huge literature telling us that without political union, you cannot have a functional monetary union. And apparently, the data show us that this sentence has more empirical support. This is the real trouble we must deal with, in my view. Thank you all for coming and for sharing with us your views. And now I leave the floor to the next session, where Marcello will share a session on the merits for a fiscal currency within the euro disequilibria, a theme which is widely discussed now in Italy, but it's Marcello that will introduce it. So